blockchain technology in finance and accounting. To discuss today's interesting topic, we are joined by a reputable speaker, Dr. Stefan Romeike from School of Management, Technical University of Munich, Germany, as he will talk about blockchain, the importance of technology, smart contracts as the basis for a token of ecosystem, and several other cases in the finance area. Thank you all for attending. My name is Safi, and I am your master of ceremony of the day. It is my greatest honor to assist you through today's event. First of all, let us all deliver our thanks to God, as this webinar will not be possible without His blessing. Before we begin our lecture of the day, there will be an opening remark delivered by the head of Magister of Accounting, Universitas Trisakti, Indonesia, Dr. Sekar Mayangsari. Dr. Sekar, the time is yours.
Okay. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon to Dr. Romeike as our invited speaker, Dr. Nurhastuti as moderator today's webinar, my students and all participants. Thank you for all attendees, especially to Dr. Romeike, who has spared 2 hours his time to give a lecture on blockchains in finance and accounting. This event is one of the international guest lecture that we held in this semester. Our guest lecturer today has a lot of experience in blockchains, not only as practitioners, but researchers as well. This evening, he will explain from the beginning about blockchains, including some related cases. So please pay attention to him and do not leave your seat during his lecture. Please do not forget to ask a lot of questions during Q&A session, as it will improve your understanding. Before I end my speech, please let me give brief announcement that next month on 9 to 11 November, we will have an annual Asia Pacific Management Accounting Conference hosted by Universitas Trisakti and also Universitas Udayana. The conference will be attended by researchers from around the world, including Japan, Thailand, Malaysia, US, Canada, and so forth. So I will highly encourage all today participants to sign up and participate, as it will raise your awareness to design issue, including about finance and accounting, especially in management accounting. This year, we are addressing the topic of sustainability issue. So please don't forget to attend and mark your calendar of this event. Okay, that's all from me. I hope all of you have an enjoyable time during this webinar, as you will gather a valuable lesson from remarkable speaker. Thank you, everybody. Now I will return the control of today's event to the Master of Ceremony. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Sekar, for such an amazing speech. To celebrate and remember today's wonderful event, we will have a photo session. To all participants, please turn on your camera.
Okay, let me take a picture for the first slide. 1, 2, 3. For the second slide. 1, 2, 3. For the third slide. 1, 2, 3. For the fourth slide. 1, 2, 3. For the fifth slide. 1, 2, 3. Thank you.
All right, thank you. Now, we will proceed to the main event of today's webinar. I am going to invite our incredible moderator for this discussion, Dr. Nurhasuti Wardani. She is currently an active lecturer of Universitas Trisakti Indonesia and a board member at Institute of Halal Investing in Oregon, USA. Dr. Nurhasuti obtained her PhD degree in the University of Queensland in the year of 2020. Throughout her journey, she has made such a tremendous amount of publication, especially in the topic of advanced accounting, good corporate governance, and accounting theory. She has made the list of top most influential women in Islamic business and finance in 2 consecutive years, 2019 and 2020. She's the co-chair of doctoral colloquium in the upcoming Asia Pacific Management Accounting Association, or APMAA 2021 conference. Without further ado, let's give a warm welcome to Dr. Nurhasuti Wardani. Dr. Nurhasuti, the time is yours.
Okay, good afternoon, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. It's such an honor for me to be a moderator today. Thank you so much, Professor Sekar Mayangsari, the head of Magister Accounting Trisakti. Yeah. Bitcoin, as we know, is of interest to the economies as a virtual currency with potential to disrupt existing payment system and perhaps even monetary system. It also provides a variety of insight about market design and the behaviors of buyer and sellers. Do you want to know more? Let's call our guest speaker, Dr. Stefan Romaike. The time is yours. Thank you.
Thank you very much, and thank you very much for the invitation to speak to you today. Let me try this. Can you see my screen?
Yes. Yes.
And it's a presentation screen, yeah? Okay, perfect. So again, thank you very much for the invitation and the chance to speak here today. My name is Stefan Romaike. I'm from Munich in Germany, and I did my PhD in the last 4.5 years at the Technical University of Munich on the topic of blockchain technology in finance and accounting. Right now, or like a week ago, I started a new job, a new role as the Chief Operating Officer at Immutable Insight, a tech company in the field of blockchain. And today I would like to give you, first of all, an introduction to blockchain technology, like what are the basics, where does it come from? Then I would go over to smart contracts, which is kind of the basic, where all the token economics and all this, the blockchain infrastructure and all the cryptocurrencies that you know today come from. And last but not least, I would like to line out some use cases in the payment area, in the banking area, but also non-financial use cases to give you a big picture on what is possible with this technology and what will it change in the future. I've structured the meeting in that way that I'm gonna talk like 90 minutes, and I'm happy to answer your question then in the Q&A session afterwards. So if you have any questions, use the chat. Maybe Nur, you can gather the questions then all together, or you can unmute yourself at the end of the call and ask the question directly. I'm happy to answer them.
Okay, thank you so much.
So let's start right away with blockchain fundamentals. So where does the topic of blockchain come from? In the end, it all started with the Bitcoin white paper, or with Bitcoin, the most prominent example of blockchain technology that a lot of you might already know. What was interesting in this Bitcoin white paper was that it proposed a solution to the so-called double spending problem, which is a common problem in the old world with centralized servers, where you cannot be sure that if I have one file or one document or one item, I only send it to one person, but I can also copy it to many other persons, and I don't know, like if I have the only version of this paper. And the Bitcoin or the blockchain technology as a whole solves this problem in a way that the transfer of an asset is stored or validated decentrally. So you cannot manipulate it at a single stage on this network, because there are other participants in the network that also have a copy of the ledger. So why is this important? Because if you think about the history of the internet, at the very beginning, you had like the beginning of the internet, you had like Netscape, AOL. The internet and the information flow in the internet was a one-way street, right? Someone created content on the internet, and the end user could read it. Then platform economy came up, Facebook, YouTube, Wikipedia, where the new thing was that participants in the network, end users, can contribute to the content that is available on the internet. You can post things on Facebook, you can create your own videos, you can share knowledge on Wikipedia. So it's not a one-way street anymore, but you can contribute to the community. And what's now the interesting thing is the third era, so to say, of the token economy, because next to the read and write abilities, you're able for the first time to execute transactions. And this is you can do this peer-to-peer. So you can send someone directly money without, and this is the interesting thing, without an intermediary like a bank. And this is like the interesting thing that raised with Bitcoin and the blockchain technology, and what will, in my opinion, be very valuable in a lot of industries in the future. To start with, I would like to kind of set clear the terms a bit, because I personally hear some confusion. What is the difference between Bitcoin and blockchain in the end? So blockchain that we're talking about is one version of so-called distributed ledger technologies. Distributed ledger technologies are in the end technologies where data is stored decentrally in a network. Blockchain technology, I will come in a few seconds to how this is set up, is one way of these distributed ledger technologies, but there are also others, for example, Hashgraph. And Bitcoin and Ethereum and all these cryptocurrencies that you might know are then again a version of blockchain technology. So just to get this terminology and the hierarchy clear here. So, and what are the attributes of blockchain, so to say? They're three key attributes. So the first thing is the topic of distribution. So whereas in a centralized old server client infrastructure, you have one single point of failure, which is also still valid in some kind of decentralized setups. In a distributed network, it is irrelevant, for example, if this node or one of the nodes in the middle falls off the network, because the information is still stored on all the other participants of the network. The second important thing is the aspect of transparency. Every participant in the network can read and follow up on the transactions that happen in the network. This is kind of pseudonymously, yeah. So you cannot understand, for example, if I send a Bitcoin to someone else, yeah, because as you see, this is hashed, so encrypted in the end. But the fact that a transaction happened is visible to everyone. And last but not least, the topic of immutability is key here. It's kind of manipulation resistant, because every transaction that was once published to the network will forever be there. So how does the blockchain in the end work? So this is a block, as you can see, and I kept it very simple so that everyone can understand. So the block in the end contains 3 elements. One element is the data element, yeah. So these can be transactions or whatever. I just said, okay, it's just a phrase, just a sentence. I love dogs, yeah. Then there's a hash. I will come to that later on, what a hash is, and a previous hash. So the hash is just an encryption of the whole thing. These are the 3 elements of a block. Yeah? And there is the first block in such a chain is called Genesis block. It also has some kind of data. I didn't include anything here in this example. It also has a hash, so an encryption of the data in the block, and it has a previous hash. No, it doesn't, sorry. It doesn't have a previous hash because it's the first block in the network, and therefore there is no previous block, of course. So, and what you can see is that the hash in the first block is matching to the previous hash in the second block. And this is how this chain in the end is established. Yeah? And the same goes also for the next block then, where you can see that block 3, the previous hash, is the hash of the second block. Yeah? What is hashing? Hashing in the end is an encryption method that was developed by the NSA. And the hashing that is used for Bitcoin is called SHA-256, which stands for Secure Hash Algorithm. It is 46 characters long. Yeah, so this is like a standard hash. When you hash some documents, whatever, you get out these 64 characters, which are hexadecimal, which means that you have elements of 0 to 9 and A to F. And since you can combine all this, you have 2 like this is the amount of possible combinations and that you have. So as you can imagine, this is quite a number. So, and why is this topic of immutability key that I presented earlier? So imagine that for example, in Germany, if you buy a ground or a house, you have to register this in a land register. Yeah, and now, for example, I want to buy a house. I buy this house, and the land register office uses blockchain for the documentation of the land register. Then the information that I own a house is somewhere in the middle of this blockchain. So, and now someone says, okay, a nice house, I want to have it, and I'm IT specialist, I'm a hacker. I'm gonna manipulate the data in that way that here in the data is stated that not Stefan is the owner of the house, but someone else. Yeah? So he manipulates the data. And the point is that the manipulation of the data changes the hash as well, so the encryption, right? Which is why the hash and therefore the content of the block is changed. And as I said earlier, this hash is linked to the next block, and therefore the previous hash of the next block is not any longer matching with the first hash. The previous hash is also part of this block, and therefore it changes the hash of the following block. And this is how a chain is created, which breaks the network. So in the end, if you want to manipulate the data in this block, yeah, you have to manipulate all these data as well, so that all the hashes are meshing again. And this is quite impossible because, as I said, there are so many options to hash, so many versions of this hash that it's quite impossible to fix this manually. Now imagine you are like the best IT expert in the world, and you manage to hash all these, or to manipulate all these data, so that here in the end it says, okay, that's correct, it's not Stefan's house anymore, but someone else's. Yeah? Then you still have the aspect of decentralization, which I mentioned earlier, because imagine this is like the land register of, stick to the example of Munich, yeah. The data is decentrally stored, also in, I don't know, Berlin, Singapore, Bangkok, and Jakarta, yeah. And what happens is that in the Bitcoin network, it's always a the consensus mechanism, so the way it is validated, what is the truth, is not based on like content, that someone is sitting there and validates the content, but it's a simple mathematical logic. So as soon as 51%, or at least 51% of the network are of the assumption that something is correct, or that the data that they have is the valid one, then this is the truth. Yeah? And what happens in this case is that, what did I say? Berlin, Bangkok, and Singapore see, okay, my data does not match the data in Munich, and therefore we gonna copy the correct version. And as I said, correct is not from a content perspective, so not from a simple majority perspective. I copy the data from our servers to Munich because we are right and Munich is wrong. And in the end, Munich has the correct data again on its servers in the ledger. And all these, the IT experts, IT hackers attempts were did not succeed. Yeah? And this looks quite easy in this setup, that you could also argue that, okay, maybe if he's a professional hacker, then he could also attack this one, and this server. But for example, if you look at the Bitcoin network, Bitcoin has roughly 10,000 of these nodes. So you would need to manipulate more than 5,000 nodes, data on 5,000 nodes, which are globally distributed, to kind of manipulate the ownership of Bitcoin or the transactions on the Bitcoin network. And this is quite impossible, because it requires billions or even trillions of hardware to do this. And this is not even the value of the whole Bitcoin network, and therefore such an attack doesn't make sense at the moment. This is, and there are different consensus mechanisms that are used. So the most prominent one, which is also used by Bitcoin, is the so-called proof of work, where you calculate hashes, the hashes that I previously mentioned, in the so-called mining. This is like a trial and error approach. I'm going to show this on the next slide. And in the end, if you solve this, the problem, the mathematical puzzle, then you are rewarded with Bitcoin. At the moment, it is 6.25 Bitcoins that you get as soon as you find the solution to this hashing problem. But there are also other other consensus mechanism. The most prominent one that is mainly used is proof of stake, where you are allowed to validate transactions on the network based on the on your stake in the network. Yeah, taking the example of Ethereum, for example, you need 32 Ether, so the cryptocurrency in the Ethereum network, to stake. And I think there are like 100 million Ether at the moment circulating. So you get, in this case, if you stake 32 Ether, you are allowed to validate every 30-second transaction out of 100 million, and you get rewarded accordingly. Okay. Let me quickly explain what the mining is, because the mining is very often in discussion and in the media, because it is quite energy intensive, and therefore I want to go on this a bit. So I said in the beginning, you have 3 elements in a block, which is the data, the previous hash, and the hash. It is not fully correct. There's a fourth one, which is called the nonce. Nonce stands for number only used once. And how mining in the end works is that you aim to find a nonce which sets this hash under a specific threshold. Yeah, and this threshold is defined in the algorithm, in the code of the Bitcoin. Yeah, it says like, I think it's like something like 6 leading zeros. Yeah, so if you hash something, for example, you're going to end up with a random hash, because hashes are not deterministic. Yeah, so you do not know what the hash is if you hash a certain document, information, or transaction. Yeah, so you start with hashing with a nonce once, for example. Yeah, then you have the hash 16E and so forth. Yeah, which is not below this threshold that you defined. So you're gonna try the 500. It has 1 leading zero. It's a bit smaller than the first one, but it's still above the threshold. And then in the end, you are at 9,328, and you see 1, 2, 3, 4, 5 leading zeros. You're below the threshold. You found the correct nonce to close this block, which is called the golden nonce, and you find it, so you get 6.25 Bitcoin as a reward. I'm going to skip and the point is that all the 10,000 nodes that I mentioned earlier in the Bitcoin network, for example, they are trying to solve this problem. They are trying to find this nonce. However, only one of these nodes will find the nonce, get the 6.25 Bitcoin as a reward, and the other 9,999 are not going to get anything, but just kind of wasting their hardware and their energy that they're using. Yeah. So I'm going to skip the demo, I think, because of the time. And this is exactly what leads to the energy debate that is, at least in Europe, going on at the moment, saying, okay, look, for Bitcoin, for example, the whole network uses as much energy as Malaysia. It has the same amount of electronic waste as Luxembourg, and a single Bitcoin transaction, so only me sending a Bitcoin or a fraction of it to someone else, wastes as much energy as nearly 60 US average households per day. So these amounts are massive, right? However, the good news is that this is known in the blockchain community, and there are ways out of it and that are already ongoing. So the first thing is that you kind of need to set the whole energy consumption discussion in relation, because to my opinion, it is mainly discussed because it is the first time since blockchain transactions are transparent, as I outlined in the beginning, it is the first time that you can fully measure the costs that are related to a network. Yeah. However, if you compare this to traditional industries, for example, banking systems, or the gold mining, which is also often compared, then Bitcoin only emits 10% of the traditional banking system and only 40% of the gold mining industry of CO2 per year. Yeah. Now you can argue that Bitcoin is very, very much smaller than the traditional banking industry. That is completely correct. However, it is still increasing, and I think the energy consumption will not rise accordingly. Second thing is that Bitcoin transactions are not only the mining is not only for the transaction cost, yeah, but it also secures the network and the wealth and the money that is in this network, right? Because as I said earlier, all the transaction information are stored on nodes in this decentralized network, and it is immutable, means that nothing is deleted. Yeah, so you can right now you can open your browser, go to the corresponding websites, and see what was the ever first transaction the Bitcoin network or the Ethereum network or any other network. Yeah, so it kind of stores the knowledge and the information and the wealth in this network, and this wealth is increasing constantly. So and the energy consumption is not increasing that fast. Yeah, so in the end, the wealth that is in this network kind of counterbalances the energy consumption. Third thing is that a lot of, or that mining is energy intense, yeah, and it is only profitable if you do it in regions where energy prices are low, and energy prices are low where you have a lot of spare energy, yeah, which is, for example, in the desert of Texas, yeah, or somewhere in the Nordic countries where a lot of hydro energy can be used. So it is estimated that about 78% of the energy used for mining is already now coming from renewable energies. And don't get me wrong, I'm not kind of I'm not happy with with this energy consumption, yeah. But in the end, the networks are working on that. So the consensus mechanism that I mentioned earlier on the proof of stake, this has a much lower energy consumption because it's kind of defined who is validating the transaction, and not 10,000 nodes are running after it, but only the one node that was kind of set to validate the transaction. So in the end, proof of stake mechanisms are set to be 99% more energy efficient than the old proof of work mechanisms that are used by Bitcoin. So this would be like the first chapter. We can discuss any questions like on the fundamentals if you have it already.
Not yet. So we are still opening through Zoom chat, yeah, for the questions from the audience. Yeah, but Steven, to be honest, this is new for me. As my understanding, the controversials of blockchain and Bitcoin is about the volatility. And I don't know that there will be an impact to the environment. I mean, so you give a new insight to us about there is a possibility of impact to the environment, and the blockchain system trying to minimize this kind of destructions to the environment. I mean, it's very new for us, to be honest. Yeah, because yeah.
You mean the volatility of the prices?
Yeah, the price, because most of the papers, I mean, they are saying, I mean, the price is volatility. You cannot rely Bitcoin as a very reliable alternative asset. Most of the paper, they are saying like that. I don't know. I mean, it's like what I read like that. Yeah.
Yeah, understand.
Iya, ada nominal di sampingnya kan angkanya.
Okay, sorry. I think it's disruption from the audience. Okay.
I understand. Let me quickly answer that question. So this whole volatility issue is correct, yeah. And there are a lot of also institutional players that say this is the reason why they're not going into that domain. But this is kind of a very narrow view, like a short-term view, right? So because if you consider Bitcoin on the long scale, since it was like published in 2008, the prices increased from a few cents to what do we have at the moment, like $55,000 US. Yeah. So in the long run, the curve is upward. Yeah.
Okay.
On a short-term perspective, you're fully right. Yeah. So Bitcoin was like $40,000, I think, 2 weeks ago. Now or yesterday we had like $55,000, and we'll probably go down to, I don't know, 50, 45 again very soon. Yeah. So you have a fluctuation of more than 10-20% in a week, which is like from traditional banking perspective horrible. Yeah. However, there are, so in the end, if you want to utilize blockchain technology for payment, there are other ways to do that. For example, there are so-called stable coins. I think I will go to this in a few minutes. There are stable coins which are pegged to the US dollar, for example. You can be sure that every stable coin, for example, the US dollar coin, is always worth $1 and you can rely on that. Yeah. So you have the price stability on the one hand side, and on the other hand side, you can leverage the technology abilities that is allowed by that, fast transaction, low cost transaction, and so forth. So that there are in the end possibilities that you can get rid of this volatility. And there's also hedging already, where you can buy so-called perpetual swaps to hedge all the movement, or not all the movement, but a lot of the movement in the market.
Okay, Stefan, now we have 3 questions from the audience. Are you going to answer or continue your presentation?
If they're on the basics, then I will probably answer them. If they are on something else, we're gonna like put them in the back. Let me quickly read through them.
Zoom chat, yeah. Like the first one is from Raditya. He asks, what actually determines the value of cryptocurrency? Yeah, so that's the first questions. And then the second questions, if in the future many blockchains are developed, will it have a negative effect on a country macroeconomy? So it's up to you if you want to continue your presentation, and you will.
We can answer them now. Yeah, let me maybe take the first one for the second. So what determines the value of cryptocurrencies? That is correct. So cryptocurrencies skyrocketed in the past. So and a lot of people say, look, there is nothing behind it. Yeah, it's just code. How can it be like $55,000? And one answer is that like it's more like a psychological perspective. Yeah, so like every asset in the end is valued under or by the people that use it. So it's the same for like if you have like a painting of Picasso or something. If no one would pay like millions for this painting, then it is also not worth millions, right? So and this is valid for every asset. Yeah. So same as for gold. Yeah. If not someone asked or said, okay, we're gonna use gold to as a trade currency for goods, yeah, then this like shiny yellow stone would be worth nothing. Yeah? Same look at the money bills, yeah, like the for example the $50 note. Like the underlying asset is not even cents worth, yeah, but everyone is aware that this paper piece is worth $50, and you can get goods in exchange for $50 for that one. Yeah? So in the end, what determines the price of any asset is the community that believes in the value of this asset. Yeah, first thing. Second thing is that of course, it doesn't seem like value in the beginning, but as I said earlier, you need hardware to run these nodes, and you need a lot of hardware if you want to manipulate the network. Yeah, but this is also true for just maintaining the network. So a lot of these miners that are the core of the security and the operation of this network, and they require a lot of hardware, and they are they need the reward of 6.25 Bitcoin to kind of survive and buy and maintain and pay their hardware. So in the end, there is also an underlying asset under cryptocurrencies and crypto mining, namely hardware.
Okay.
So because there are a lot of questions now coming up and they're quite long, maybe I'm gonna proceed with the lecture for the moment, and we're gonna put the questions a bit further in the back. Okay, and maybe someone of you can help me to figure out the most important and most relevant ones. Yeah.
Okay, thank you.
Cool. So so this is kind of the blockchain fundamentals, yeah. How the technology, where did it come from? How does it work? And now, and this is like valid mainly for Bitcoin, yeah. And Bitcoin is Bitcoin was the first cryptocurrency, as I said, but it's not like the most intelligent one, I would say, because in the end you can simply just pay with this one. And it serves, of course, as a store of value and as the first entry point into the network. But like a few years later, I think it was 2013, a guy called Vitalik Buterin came up with another proposal for a second cryptocurrency, which is called Ethereum. And he said, like, well, that's very nice that you have a payment tool here, but this technology is so promising, it can be so much more. I create a cryptocurrency which allows others to get into this crypto and token ecosystem and create own business models, own cryptocurrencies. And this is Ethereum in the end. And the core of Ethereum are so-called smart contracts. Smart contracts are not, maybe go further, smart contracts are not really contracts in that sense, but they're simply written code. Yeah, they are publicly available on the network, and in the end, they are simply if-then functions, as you know it from Excel. Yeah, so a very simple example would be like a Coke vending machine. Yeah, it says like if you receive €3 in the coin slot and someone presses the button Coke 0, then the machine releases a Coke 0. Yeah, and this is kind of a very easy version of this, what happens in smart contracts. Smart contracts trigger based on an event. They trigger transaction. Yeah, for example, if the end of the month is reached, yeah, please pay out the salary of the employee in cryptocurrency. Yeah, if it's raining the whole August in Germany and you cannot harvest your crops, then please pay the insurance to the farmer. Yeah, so these are event triggered code in the end, and therefore there's a quite famous saying which says smart contracts are neither smart nor contracts. Yeah, neither smart is understood because, as I said, well, they can be complex. Yeah, but in the end, it's a simple if-then construct. Yeah, and nor contracts refers to the fact that if you compare it to a legal contract, which is defined as a voluntary, deliberate, and legally binding agreement between two or more competent parties, yeah, a smart contract is a computerized transaction protocol that executes the term of contract. Yeah, so they're very like much difference between the two, and which is why if you set up a token system or use cryptocurrencies in the ways that I will explain later on, you in most cases need a legal contract in addition to the smart contract, which defines kind of the legal framework and setup. And this is also why Vitalik Buterin, the founder of Ethereum, said once that he kind of regrets to adopting the term smart contract. He should have called it something more technical and boring, something like persistent scripts, for example. Yeah? So to take out this contracts legal binding element of the definition, which is not the case for smart contracts. Yeah? So what are the benefits of these smart contracts now? So in the end, they are autonomous, right? So you don't need a broker, you don't need a lawyer, you don't need an intermediary, you just need a good programmer to set up the code. Yeah, they are safe. Yeah, since everything on the blockchain is encrypted and quite heavily, as I introduced a few minutes ago. The smart contracts and what happens there is relatively safe. It is backed. Yeah, not in the traditional way that you have it on a USB stick, but everything on the blockchain is immutable. It is there, so you cannot kind of lose it. It has speed aspects. So since it is fully automated, yeah, you don't need a lot of paperwork. You don't need someone that is kind of pushing a button. Yeah, but as soon as the August had like 20 raining days in Munich, then the insurance pays out the money. There's no one that needs to check this. Yeah, you have a lot of savings. As I said, you don't need a notary and a lawyer, so you don't need to pay him. And it is very accurate. Means that everything that is programmed in the smart contracts will happen according to the smart contract. So there's no room of interpretation in the end. And so there is no room for ex post errors since there's no manual work. I emphasize the ex post in this context because there are examples where when the token code is badly written, then of course you have errors in the code and in the execution. There was one famous example called the DAO, which was a token sale a few years ago at the very beginning of the blockchain, when the blockchain came up, and they messed up with their smart contract, and someone saw that and kind of triggered an event where a random hacker could pull out millions of US dollars of the smart contracts because the contract was malfunctioning. And the DAO didn't survive a year, so they went bankrupt and shut down operations just because a programmer messed up the smart contract. So you need to be very safe and very sure what you program here, because it can have very intense drawdowns if you don't do it. And just to give you an example, this is an own cryptocurrency in the end, and this is properly working. I didn't program it myself, but in the end, and we don't need to go into detail because I'm also not a programmer. But in the end, what I wanted to show with this slide is that it is not rocket science in the end, but that like someone that is into programming and has like an IT background, I think he or she will be very, very quick in adopting this programming language, and will be able to program the code him or herself. And why is this important? Because if you look at all the cryptocurrencies and ecosystems that are out there, 76% roughly are using examples like this. So they are not, so the cryptocurrencies that use their own blockchain, for example, Bitcoin, or Cardano or Solana, they are like 1/4 of them are only using their own blockchain. However, 3/4, so 75%, 76%, they are utilizing an existing blockchain, doing exactly what I showed earlier here, writing such a code, utilizing mainly the Ethereum network to set up their own business, cryptocurrencies, whatsoever. And this is the basis for everything that will follow now in the use case discussion. So let's go on and answer the questions afterwards. So the first use case, of course, and this is what you, Noor, approached me with, is the use case of payments. But however, payments are just a very small fraction. You can use Bitcoin blockchain technology for that. Sorry. However, it's only a very small fraction of the use cases, because Bitcoin and blockchain technology can do very much more. So we're going to start with the stable coins that I introduced earlier. A stable coin is a cryptocurrency that is pegged to fiat money. Means that the issuer gives you the promise, if you're gonna give me back my cryptocurrency, I will give you $1 out of my bank account. And this leads to the fact that there's no fluctuation in the price, right? Because when something can always be exchanged for $1, then it is worth $1, right? However, cryptocurrencies are way easier to transfer than traditional bank transactions, and at very low cost. So if you look at, for example, this is a screenshot from CoinMarketCap of yesterday. You see that among the top 10 cryptocurrencies, there are two of these stablecoins. One is Tether, and the other one is the US dollar coin, and they both have a market capitalization of 68 billion US dollars and 32 billion US dollars respectively. Yeah? So this is like kind of the possibility to use blockchain and cryptocurrencies without the mentioned volatility for transaction. And there are others, for example, Stellar or Ripple, which are like whole blockchain ecosystems that are designed to solve some issues in the corporate banking world. Yeah? For example, they can be used to for interbank clearing, or for clearing in the FX markets. Examples, as I said, Quorum, Stellar, Ripple, and there are big projects at IBM, at JP Morgan. JP Morgan even announced or even distributed their own cryptocurrency. Yeah, so also traditional banks are now going into this space. And how this in the end works, for example, at Stellar, is that you want to send some Philippine peso to Nigeria, and they're gonna kind of convert the peso into US dollar, into Lumen, which is the cryptocurrency of the Stellar network, and from there to the Nigerian naira, so that in the end you as a person see, or as a bank, you see as a transfer from the Philippine peso to the Nigerian naira, but the whole back end in the end is converted by Stellar. So this is kind of the corporate banking world, and but there's also use cases for the end user. So from the World Bank study, which is a bit older now, but in the end they state that 1.7 billion people in the world do not have a bank account. However, 2/3 of these people, so 1.1 billion, do have a mobile phone. And this is where the cryptocurrency can help as well. So there are providers, for example, Strike, which is Mr. Meller. He's also the guy that introduced or that helped to introduce the Bitcoin as a legal tender in El Salvador. Yeah? And also this is from AirFox. Yeah, in the end, what they offer is that you can send money to your family. Imagine you are like working in Miami and need to send some money to your family in South America or Mexico. You can use their technology, which is based on blockchain, or in this case on the Lightning Network of Bitcoin, to send money for free to your family within seconds. Yeah, it's quite instant. In contrast to your old alternative, which would be like going to Western Union and to like the old paper-based and bank-based and of course very expensive process. Huh? So this is just like a short intro into the question of how to use blockchain for payments, but I would rather focus on other aspects which make this technology even more valuable to a lot of industries. So the second use case is tokenization. What is tokenization? Tokenization is the process of putting a real-world asset or a commodity on the blockchain. Yeah? And there are a lot of use cases and examples that are out there what you can tokenize. For example, real estate. Real estate is really a big area where tokenization is used. So this is like an old New York Times article, I think it's from 2018 already, where a Manhattan-based real estate company tokenized a condo on the blockchain. So you can as an investor, you don't need to buy like a whole flat, but you can invest, for example, starting from $1 in such a building and participate in the value development of this. Second thing, art and collectibles. So there was one announcement, which was, I think it's also 2018, a bit small here, yeah, 2018, where a picture of Andy Warhol was kind of tokenized, and you could then participate in the token sale. It was sold to 100 investors in the end. So you do not buy the whole picture, but you buy a percentage share of the picture and can from there on participate in the value increase of the picture. Downside is, of course, you cannot take the picture and put it on the wall in your flat because it's somewhere in a safe where the tokenizing service provider is. But however, as an investment vehicle, this is a very good opportunity. And another thing, and this is in my opinion one of the biggest advantages of blockchain technology, is that you can use it now for securities. Yeah, so the process in the old world, and to be honest, Germany is very traditional and very paper-based in that way, is that you need a paper-based document for every share, for every security that you issue, and that is somewhere in a central storage. Yeah, and if you're going to buy or sell something, then there's a very long backbone and process to kind of sort out these documents and who they belong to. And on a blockchain, and this is a press release from 2020, I guess. Yeah. It is possible that you issue securities, and in this case, a digital Schuldschein. This is a German term. It's something like a loan agreement. Yeah, you issue this via a blockchain, and this is doable in nearly real time. And of course, also the liquidity and the trading is much easier compared to, and cheaper, of course, compared to previous times. So in the end, the benefits of tokenization, first is that you can fractionalize ownership, and this is especially interesting for assets that had like high economic buy-ins, for example, real estate or expensive art. You can fractionalize it into very small pieces. As I said, you can invest, like, if this is a design thing, yeah, but you could invest in pictures or assets like starting from $1, and this of course increases the market depth and also the liquidity, yeah, because I think it's very much easier to buy a fraction of a $30 million condo in New York instead of the whole thing, right? And another advantage is the global accessibility. Yeah, you can trade it 24/7, 365 days a year without downtimes, closing of exchanges or anything. The settlement is nearly real time. You have very low transaction costs, and what you don't need to forget is that these tokens are smart contracts, which I explained earlier. So it's programmable code. So you can code everything you want into this code. And this could be like, if we stick to the example of real estate, yeah, this could be, for example, if you own 10,000 tokens of this real estate, you are most likely an owner, and therefore you have access to the park garage or the gym, just as a very plain example. Yeah, and there are a lot of other use cases where you can utilize the fact that this is simply code, and you can encode a lot of things into these smart contracts. There are a lot of other assets that you can tokenize. Yeah, it's intangible assets, patents, licenses. It's metals like gold and silver, which is already in existence and has the large advantage that if you want to invest in physical gold, yeah, you don't need to have like the piece of gold and put it to your deposit box or safety box, yeah, but you can have like a tokenized version and someone else stores it for you. It's interesting in the area of consumables in terms of tracking and tracing of goods, financial instrument I mentioned earlier, but also collectibles. I'm not sure, maybe some of you heard about this NFT hype that was going on, yeah, where digital artists sold the pictures for a lot of money, yeah. And I will give you just a quick example. Well, this is like from the European markets, but however, I think it's also valid for other markets, like what tokenization means in terms of saving potentials, right? If you look at the issuance of a security, yeah, for example, a company share or debt instrument, yeah, in the end, you have something between 35 and 65, which is of course quite a range, but as an estimate, yeah, of saving potentials, yeah. And this saving potentials does not come from the structuring, like the setup of this instrument, because as you can see, the costs are the same, and tokenized assets are even more expensive than traditional instruments, because you have like the whole legal setup, as you can see here, but on top you also need to have the programming and the token creation. So it's actually not the same, but it's even more expensive. But afterwards, if you go look at primary markets, yeah, so the issuance itself of the security, you are way cheaper, because you can get rid of all these issuance agents, for example, so your cost shares smaller. Same as for custody, yeah. Crypto custody is way more cheap than traditional custody, and also on secondary markets for the end user. So if you want to buy something on an exchange, it's way cheaper, because you can get rid of these brokerage fees, because you can trade peer-to-peer. So this is an example of like the benefits of tokenized securities. Another very important blockchain use case in the finance area is the so-called decentralized finance. And decentralized finance refers to an open source, permissionless, and transparent financial service ecosystem that is available to everyone and operates without any central authorities. That means you use traditional banking applications and products and put it on the blockchain. This can be lending, borrowing. Yeah? So you can just lend cryptocurrency somewhere and receive interest, or if you want to buy a new car, for example, you can borrow cryptocurrencies. You can use decentralized exchanges by not using an exchange that is kind of getting a large fee that you need to rely on, but in the end, it's peer-to-peer exchanging of digital assets. You have derivatives, yeah, for example, put and call options, futures. This is all doable on the blockchain. And also an interesting use case, which I mentioned a bit earlier as an example, insurances. Yeah, you can insure against price risk, counterparty risk, and since it's done with a smart contract, you don't need to call your insurance agent and say, hey, I had a let's stick to the example of the farmer. I had a very bad August. All my crops are destroyed. I need my insurance premium. No, it's just it's paid out automatically. And as you can see here, the interest rates are relatively high. Yeah, of course, it's a risk connected to that, because the technology is new and the service providers for this DeFi lending in this case are even newer. Yeah, so you have kind of a default risk. However, compared to the zero interest policy that is going on in at least in Europe, this is very interesting. And there are a lot of opportunities in this ecosystem. Don't want to go into all the details on that, because I think the picture is quite colorful and a bit confusing maybe, but in the end it is 4 layers. Yeah, the first one is the core infrastructure down here. Question: how do you get money and data into the DeFi ecosystem, where, for example, Bitcoin is a store of value, and also Ethereum with all the smart contracts, and also the coin Ether are kind of a good entrance point. Then you have the so-called oracles, which provide real-time information. Again, the farmer example: how should a blockchain know that it was raining 20 days in August, right? Therefore, you need these so-called oracles, where off-chain data, so to say, is provided into the blockchain now. Then you have all the finance products, what I mentioned earlier. These are the insurances. You have the stable coins that I talked about, derivatives, lending, saving, and so forth and so on. On the consumer base, you have wallets, data providers, and then there are also some interfaces to legacy banking systems. Yeah, for example, Polymath and Harbor. These are service providers that help companies to tokenize their assets, their financial products, to get it into this ecosystem. And the ecosystem itself is growing. At the moment, so the screenshot is as of yesterday, we have $90 billion in the DeFi ecosystem, which is, well, compared to traditional financial system, relatively small. But if you see like how much it grew, so I think beginning of October, we talked about 1-digit billions. So it was something like 8 or 9 billion beginning of the year, and it kind of 10x within the last couple of months. However, there are of course challenges to it. As you saw in the very colorful picture, it's a very cluttered ecosystem. So you kind of need to know where you put your money, and that you get to the kind of reliable infrastructure providers. This topic was kind of changed in the end, but at the very beginning, these services offered a very bad user experience. So you needed kind of sometimes even programming skills to understand it. You have, of course, a high risk of user error, because a lot of these platform or comparison to your bank account, where you can say, or your credit card, where you can say, sorry, there was someone using my credit card, it was not me, or I sent money to wrong receiver, please undo this. This is not possible for blockchains. As I said earlier, it's immutable, and everything that you do wrong in the end is your fault and cannot be undone. So you need to be very careful what you do there. And it's still a bit of a poor performance compared to traditional finance systems. So Bitcoin, for example, is always said to have only, I think it's 7 transactions per second, while Visa card has 24,000. So just as a comparison. But this is like for the blockchain, but it also, of course, translates into the applications that are built on top of these blockchains. And this is a topic that is ongoing, that a lot of projects are trying to solve, but it's still not solved in the end. Number 4, startup financing, and this was actually the topic that I was doing my dissertation on mainly. At the time I started, 2017, there were these so-called initial coin offerings. What is an initial coin offerings? An initial coin offering is a way to finance an early stage project. How does it work? The project or the startup discloses a white paper, which is like a prospectus light, where the information, what is the product, who is the team, what are you intending to do, are kind of included and available to the investor. And based on this information in the white paper, the investor invests cryptocurrencies in later ICOs, you could also use fiat money or credit card, yeah. But in the end, you invest cryptocurrencies into this project and receive crypto tokens of this project in return. Yeah. And then you can either hold these tokens and use them with a project in the future, or you can trade these tokens on cryptocurrency exchange. And this is kind of where all the markets that you see on CoinMarketCap or CoinGecko, for example, come from. Yeah, and when I started, it was quite an interesting market because in the start, as I said, Ethereum was somewhere here, 2013, which enabled all these token sales, and it was very small. But then in 2017, here where I started my dissertation, in 2018, volumes and also prices went up. Yeah, and for example, at the in Q2 2018, the volume of ICO was with 7.3 billion US dollars, even greater than the IPO volume at the New York Stock Exchange, just to give you an example. And in the end, there are, and these are just some market insights, the largest ICO ever raised 4.1 billion US dollars. It was called EOS. And maybe what you need to know is that a lot of these projects did not even have like a prototype. Yeah? So you just invest based on a paper which is unaudited and unverifiable. You invest based on this paper in a startup that doesn't have a product. Yeah. And in this context, these figures, yeah, Telegram, you all know, these are very huge amounts. Yeah? Maybe this is not true for Telegram because they had a product already back then, but this is incredible, yeah. And this is like a very interesting statistic that I mentioned earlier. So like 87%, nearly 90% of all these token sales were created on Ethereum using the smart contracts that I introduced in the last chapter. How does such an ICO work? So in the end, you have an announcement saying, look, we as a project launched project XYZ, and we gonna sell our tokens in a few months. So you kind of distribute this information in forums, for example, Reddit or Bitcoin Talk. Then you promote the whole thing. You have the white paper, you do marketing campaigns, advertisements on the internet mainly. Then the investors register on your website, and then in the end you have the token sale itself, where you get the funds and distribute the tokens, and in the end you list the token somewhere on exchange. Advantages, of course, from a startup perspective, are that you are globally available. It's quite quick and cheap to realize. So there are startups that are kind of developed that within weeks, yeah, while an IPO takes sometimes years, yeah. You have new target groups, rather young people and technology-affine people, and of course the topic of trading and liquidity, which I mentioned earlier, is also coming up here. However, at that time, it was quite shady, this ICO business, and you had kind of a legal uncertainty. There are studies that say that roughly 70% of the ICOs conducted in 2017 and 18 were scam. 70%, which is quite massive, and which is the fact why these ICOs are not conducted in this form today any longer, because then two other products or mechanisms developed. So the one thing is the so-called security token offering, where you use the same technique as the ICO that I mentioned, but you put an underlying asset on it and you comply to regulations. Yeah. So this gives the investor more legal certainty. And the next step was then initial exchange offerings. In the end, the same initial coin offerings that I now explained, but you do it directly on an exchange, and this exchange is covering all the legal aspects, do your KYC and default and so on. Yeah. And this is like what is at the moment going on, security token offerings and some initial exchange offerings as the new form of token sales or startup financing through cryptocurrencies. So I think a lot of information for you, and I would like to end my presentation with one last non-financial example where blockchain technology can really help people. Yeah? And this is in a refugee aid and in a refugee camp. In this case, it is in Jordan. Yeah, where a lot of refugees from Syria came to, and to give you some expressions, this is how the refugee camp looks like. This is the supermarket in the refugee camp, and this is the supermarket on the inside. And what happens in these camps in the end is, so that everyone gets food and water, is that the World Food Program distributes monies to the different refugee camps, and these refugee camps then give paper-based vouchers to the refugees, which they can use to go to the supermarket and buy food and water there. Yeah. So the problem is that the transaction costs are very high. Yeah, to print, to like transfer, you need to print all these paper vouchers. You need to collect them in the end reader, convert them to money, and so forth and so on. You have a very low security, and it's very easy to manipulate. And because what someone that led this project told me is that there is a lot of kind of younger people that are stealing these vouchers from other people, and this is kind of bad, yeah, because then you have like a very small family who's cannot help themselves because someone else is stealing the vouchers. Yeah, so not a good thing at all. And in the end, you need to kind of audit and archive the whole thing paper-based. This is kind of a lot of manual effort. Yeah, and what the company in this case, the name is Datarella. They're sitting in Munich and developing blockchain solutions. What they did is they introduced the payment via blockchain in these refugee camps. So in the end, the World Food Program now is paying money to a blockchain, and the World Food Program and the refugee camp is then distributing this money digitally to the refugees, and based on this, the refugees can buy the foods in the supermarkets. Advantages, of course, quick, low transaction fees, a high level of security. It is transparent. You can do like a direct reporting. And of course, it was kind of a PR thing for the World Food Program, the tech scene then. And how does it work in the end is that the refugees get an account, and the supermarket uses iris scanners, yeah, which is like kind of the best identification of an individual, even better than a fingerprint, yeah. And you go to the supermarket and then just get your eyes scanned, and they see, okay, you have this balance on your account, please feel free to buy whatever you want. And very secure, because no one can steal your vouchers anymore. Yeah? So very secure, very like a win-win situation, win for the refugees because they can buy in the supermarket without any trouble, and also win for the World Food Program, because in year one, they served 100,000 refugees and saved $1.8 million US. And in year two, they served $500,000 refugees and saved $9 million US only because they got rid of transaction fees and all this manual working stuff. And of course, this money can then go back, can be reinvested to help the refugees wherever they can, instead of going to some archiving activities or other activities. This was just another example to give you a wrap up on how blockchain technology can help in a very beneficial way, also outside the financial world. And this would be it from my side. I gathered some readings here. If you want to understand some more about the crypto markets, go to CoinMarketCap. If you want to understand DeFi and the players there, go to DeFi pools. There are also some really interested. I really like the Binance Academy very much. If you want to go further into different aspects of the technology. Read the Bitcoin white paper. It has only 7 pages and is very interesting to understand where this whole technology comes from. And if you want to buy your first fraction of a Bitcoin, go, for example, to Coinbase, US regulated, relatively safe, and start your way in the crypto world. Thank you very much.
Thank you very much, Stefan. It's so amazing knowledge today. Thank you so much. To be honest, Stefan, so we see many benefits from this system, the blockchain, just within 10 years. I mean, before at the beginnings, like no one really cares about this system, and suddenly it evolves very rapid and it integrates with the real market, isn't it? By tokenization asset. But Stephen, the thing is, in Indonesia, our government, especially central bank, is still not approving this kind of blockchain. So maybe we don't have kind of this flexibility in terms of using the benefit of blockchain and Bitcoin and cryptocurrency. But maybe if we go to buy something in the global market, maybe we can use. Yeah, so I think that's the disadvantage in this country at the moment. Yeah.
Yeah, but I think this is true for a lot of other countries. Yeah. So the whole topic of cryptocurrencies and blockchain is relatively new, and therefore regulators, not only in Indonesia, but all over the world, same as for Germany, yeah, or Europe, need to kind of understand the technology first, and then conclude what to do with it. And this is of course, a country-to-country decision. And my speech was more like generally, and no, of course, no investment advice or anything, but more like a general introduction of the possibilities which could be done with this technology.
Yeah. Okay. So now we can open the Q&A session, isn't it? Yeah.
Sure.
Yeah. Okay. Now we move to the second questions by okay. So by Domingos Ricardo, he said that okay, yeah. If the future many blockchains are developed, will it have a negative effect on a country's macroeconomy? What do you think?
Just trying to find the question, but
it's the second questions by Domingos Ricardo. He mentions the presence of digital money as a transaction tool will reduce the function of the central bank, making monetary policy ineffective. This makes difficult for central banks to accept cryptocurrency and prohibit them. Yeah.
Yeah. Understand the question, but okay. 2 things to consider. First thing is the current volume of cryptocurrencies. If you compare it to fiat money and the central bank currencies, then it's relatively nothing. Yeah. So the fraction now is very small. On the one hand side, for the moment, I think this is not a threat. Yeah. In the long term, this may be different. Yeah, but this is why central banks are already investigating in this. For example, in China, there is already a central bank digital currency in existence. There will be a digital euro soon. Yeah, so central banks are aware of the topic and already working on alternatives that they can issue a currency, for example, that combines the benefits of crypto, but also with the security that is, and the stability, of course, that is the aim of a central bank.
Okay, thank you so much, Stefan. Now we move to the third question. Yeah. Okay, I will try to find. The third one maybe from Gita Adi Pramana. Yeah. Okay, Gita. He asked 3 questions, so just let me read one question. Yeah, so is there a positive correlation between the use of blockchain and cryptocurrency? Since blockchain implementation is getting more widespread, but cryptocurrency is not accepted as a legal tender in most countries. Yeah, what do you think? So what will happen to blockchain if cryptocurrency finally banned from most of big countries like US, China, and Europe? Yeah.
Well, I think this is what I tried to outline at one of the very first slides, that cryptocurrencies are just one use case of blockchain technology, right? So in case, and this happened in China, right, with the ban of cryptocurrencies, and also in other countries, fair point. But in the end, the technology itself has a lot of more potentials, yeah, also the non-financial area. I just showed you in this case the refugee example, yeah, but you can also use it in supply chain, for example, yeah. For example, IBM and Maersk, they created a tool. It's called I forgot it, but in the end, they implemented a tracking of their containers, yeah, because with this technology, it's quite easy to understand where containers are on the ships in the world, where there is free space that you can rent. So it makes the shipping industry and the shipping of values and goods very much easier. And this is far away from cryptocurrencies and anything. And cryptocurrencies, as I said, is only a very small fraction of the use cases for blockchain, and therefore the impact should be low, I would argue.
Okay, awesome. Yeah. Okay, now we move. Okay, so this person he asked 3 questions. So maybe I just check whether there is another question from another audience. Okay, so now we move to the another person from Indra. Yeah, he asked about blockchain technology to solve these problems. Yeah, in terms of sorry, my screen is. Okay, so Indra saying that in Indonesia, underbanked aspiring mainstream class needs more financial services with 260 million population or 26 million population, yeah. And with a blockchain-based solution, address a business problem. Example, fintech. Yeah, now we have a lot of players in fintech, yeah, and e-commerce. And my question is, how about blockchain technology to solve the underbanked problems, yeah, and how to mitigate the data processing will be in place and valid, from Indra. Yeah.
Okay, I think I did not get the question completely.
So he asked whether blockchain can solve the problem of people who do not have any bank account first, yeah, and then whether the possibility of blockchain to be integrated with other systems.
Yeah, so I think the topic of helping people that don't have a bank account, I answered in my talk. There are options for that. Strike, for example. I'm not sure, because I'm also not a legal expert, right, if this is kind of allowed and accessible in Indonesia. So I cannot and don't want to comment on that. And the integration, if you look, for example, at the banking blockchains that I mentioned, like Stellar and Ripple, and there are ways to implement this into the traditional banking system. And so there are interfaces from traditional money, fiat money, into Stellar and Ripple. So there are integration potentials, but this is kind of another topic, I think.
Yeah, but I think if the traditional banking or the traditional financial system, they want to emerge with blockchain technology, they should invest more in hardware and this IT system, isn't it? For protection. Do you think so?
Say again the beginning, please.
Yeah, so if the traditional banking system, financial system emerge with blockchain technology, they have to invest a lot in hardware, IT. I mean, it's in terms of protection from hacker and cracker, isn't it?
Yeah, so in the end, yeah, at least investigate in the space, right? And this is what a lot of banks are already doing. Banks, central banks, governments. So a lot of players are investigating in this. It's more like a soft component or like a use case component. What you want to do with it. The hardware stuff, yeah, you could do this, but I think like hardware is not the primarily goal, because at big systems like Bitcoin, but also like Stellar and Ripple, they are quite safe, I would say, or relatively safe, and therefore it's more like getting started with the space overall. Yeah, understand what are the possibilities, understand what you as a institution of whatever industry want to do with this technology, and then of course if it makes sense, then you can also contribute in the security and safety of the network.
Okay. Okay, so we still have several questions, Stefan. So are you still willing to answer the questions?
Sure.
Okay, so okay, the fifth question asking state that ICOs do not require compliance with any regulatory framework and legal protocol. Most of them don't have free court. Then what are the determinants of ICO success?
The determinants of ICO success. Well, that was back then an interesting question that I actually investigated in. So in the end, what drove this ICO hype, in my understanding, was that, to keep it simple, everyone wanted to get rich. Yeah, everyone wanted to find the new Bitcoin and get rich in the end. Yeah, and this was on issuer side, but also on investor side the case. Yeah, as I said, 70% of all these cryptocurrencies that came up there were scam, roughly. Yeah, so a lot of them just got the funding, millions of dollars, closed their website and got away with it. And it's quite hard to follow up on this at that time. And now there are providers like Chainalysis in the US, which are doing this fraud prevention and tracking of such cases. Yeah, but at that time there was no regulation, and people just, also on the investment side, wanted to invest a bit of money to a bit of money to get very rich in the end, and this is what kind of drove this hype, in my opinion.
So basically just pure on supply and demand, yeah, isn't it? Yeah, just
Yes.
pure market mechanism, no intervention at all from anyone.
Yeah, so in the end, like the token price itself was normally set by the team, like the project. Yeah, they said, we're gonna sell X amount, or no, we're gonna sell tokens at $1, for example, and there will be as many tokens as you are willing to buy, as an example. So and then yes, and then it worked as a supply and demand mechanism.
Okay. We still have another question from Prof. Sekaria, the head of Magister Accounting. Can you tell us how your government regulate the cryptocurrency in Germany?
Germany, well, actually on cryptocurrency itself, like if I buy cryptocurrency, there is no like regulation on that, so at least no heavy regulation. Yeah, I can go to some account, or some crypto exchange and buy like a bit of a Bitcoin. Yeah, In the end, of course, I need to put it on my text sheet. Yeah, I need to. It needs to be text. There are clear rules for that, or relatively clear rules for that. Yeah, so like from a private perspective, this is no problem. It's different from the issuer's perspective, yeah, because also the German regulator, BaFin, it's called, they of course learn from these the ICO run 2017 and 18 and took consequences. So most of the tokens that you issue fall under the German security law, which means that it is similar to issuing a normal share, and you need to align with the BaFin, so the German regulator, to get approval to create like a prospectus, at least in a narrower version. Yeah. So these pure, there are still the possibility of doing an ICO, yeah, where you don't need all this, but this channel is very small, and in the end you probably get problems there. Yeah, so quite good steps here in Germany to, on the one hand side, get some safety and regulation on the topic, but on the other hand side to allowing startups and industry players to use this to use the technology, but in a regulated framework.
Okay, thank you so much, Stefan. Is there any questions, guys? From the audience, do you have more questions before we close the sessions? So actually, before the participants, they asked like 2 or 3 questions, yeah. But I just mentioned one of them. So do you still have time, or are you going to have another meeting?
No, sure, one more is fine.
Okay, so maybe I will just ask one more questions.
Sure.
Okay. Regarding the blockchain technology, you said that it is decentralized. What happens if there is a failure on one of the hardware that used to store this data?
Exactly nothing. Because as I said, the Bitcoin network, sticking to the example, is distributed on 10,000 nodes, roughly, a bit more, a bit less, depending on how many are online. And if one of these 10,000 nodes goes offline due to network issues, due to hardware issues, it doesn't matter to the whole system, because every other node in the system has a copy of the ledger. And as soon as this node goes online again, it gets a copy of the new entries that it kind of missed due to absence of the other nodes.
Okay. Okay. I think it's enough for our sessions. Do you think so, Stefan?
Sure. So I would answer a question. If you're fine, then it's all good for my side. Yeah.
Yeah, please, audience, if you have more questions, yeah, raise your hand or write down on the Zoom chat. Okay, one more question, yeah, Stephen, yeah. So what do you think about the future of cryptocurrency? Is it possible for them to be the future of digital money? Or do you think CBDC and stablecoin have better chance since they are regulated or backed by underlying asset? Wow, okay.
Yeah, it's a good question, and I cannot clearly answer that, of course, because I cannot see in the future. I think, so my personal opinion is that cryptocurrencies like Bitcoin will never become like a legal tender in for example, in Germany. Yeah. However, I also think that the existence and the growing of these cryptocurrencies kind of created something, namely the awareness in Germany and then also in other countries, and also on a European basis, to develop something similar on a country basis. Yeah. So I don't think that Bitcoin and Ether become like the currencies of the future. However, I think they triggered products, for example, the central bank digital currencies, but also the application within the industry with some of the use cases I mentioned earlier. They triggered them, and this will have a positive impact on the economy as a whole.
Fantastic, Stephen. So I think we have wrapped all the questions from the audience here. I hope you don't mind to share your presentation with us. Do you mind?
I'm going to send you a version afterwards, yes.
Okay, thank you so much. Yeah, we really appreciate it. And I hope you don't mind if in the future we invite you for another event, maybe for international conference in the future, yeah?
Sure.
Okay, thank you so much, Stephen. We really appreciate it. So we see that within 10 or 11 years, blockchain has evolved to become a very an alternative asset for us, yeah, and also helping us in terms of payments and also helping for non-financial sectors. Thank you so much, everyone. I will proceed to the MC.
Thank you very much, Dr. Nurhastuti Wardani and Dr. Stefan Romaike. As a token of appreciation, a certificate of appreciation will be given to Dr. Stefan Romaike. And also we will be giving a certificate of appreciation for our moderator, Dr. Nurhastuti Wardani. Thank you very much.
Thank you.
What an outstanding lecture we had today. We have now reached the end of today's webinar. Time sure flies when you're having a fruitful and interesting discussion. It has been a pleasure to be your master of ceremony of the day. I hope as this meeting enriches your knowledge and broadens your horizon, you are inspired to keep innovating and contributing in the field of accounting and finance for the betterment of society. Thank you very much for your kind participation. Good afternoon and have a great day. You may now leave this meeting. See you on the next webinar.
Okay, bye-bye. Thank you so much, Stefan.
Thank you very much.
And thank you so much for all attendees to this webinar. See you again.
Thank you so much.
Okay, thank you very much.
So Stefan, some of my students attended our talk today. Yeah, so some of questions from my students. so they give you a very good question, isn't it?
Yeah, very good. Thank you very much.
Yeah, thank you so much. I hope we can invite you for the international conference, maybe next year or maybe next 2 years. Yeah, it depends on the situations. And Prof. Sekar, actually, Steven, he really wants to travel to Indonesia if it's possible, yeah, for the international conference in the future.
Yeah, maybe next year or the year after. This year was a bit bad from the.
Next year we can invite Dr. Stephen come to Indonesia. We hope.
He already traveled to Indonesia several times, Prof. Sekar. He knows mie goreng, gunung Bromo, yeah. So yeah, it's a very nice to have you today, Stefan. I mean, we really appreciate for your knowledge with us.
Yeah, thank you very much for the invitation. Nice to meet all of you, also the professors. Thank you very much.
Okay, nice to meet you. Have a nice day, Stefan. Have a nice day, everyone.
Stefan.
Bye-bye.
Bye-bye. Bye-bye.
Thank you. Bye-bye.
Bye.
Thank you.
Thank you.
Thank you.
Bye-bye.
Yeah, Assalamualaikum.
See you next.
Makasih Bu Nur. Thank you Mr. Stephen. Thank you. Bye.
See you next time, Mr. Stephen.
Ya.
Oke, pamit ya.
Ya, silakan. Yo, bye-bye.
Bye.
Bye-bye.
Bye.
Bye-bye.